I'm so glad I don't owe taxes every year. Instead of April, February is my tax season because I always file early to get my tax refund.
That's one way to handle taxes.
Well, it can only go one of three ways. I get a tax refund, I owe taxes, or no taxes are due. Which one do you prefer?
To owe taxes. Let's look at how we can exploit credit card bonuses and bank bonuses for checking and savings accounts to accumulate more money for ourselves when paying taxes. I'm Cap, and welcome to Screaming Lincoln's Consumer Credit Series. Whether you get a 1099 or W-2 every year for your income, this approach requires that you do not spend beyond your income and be able to manage even more financial accounts. If you're the type of person who spends uncontrollably or has trouble managing their account, please stop watching this video. First rule is to always make tax payments with a credit card. Second rule is to take the extra money that's not being deducted from your income, either through your employer or from payments received through freelance work, and put that extra income into a place where it can generate more income.
This sounds like a sales pitch for an investment app, which means you're going to bombard me with referral links for Webull, Robinhood, and other apps.
Nope. Investments carry risk. What I'm doing has very little risk. I'll take that extra income that would go for taxes and set it into various bank accounts for bonus money.
Well, I'm not sure I have the time for managing all these bank accounts. It can be hard enough just overseeing one account.
Again, if you cannot manage more financial accounts, this video is not for you. I always start slow and small when it comes to doing something new with my money. So if I were starting out again, I'd scan the banking landscape for low-hanging fruit when it comes to getting bonus money for opening checking or savings accounts.
Okay, Cap, I'm listening.
Two things should be analyzed to maximize your return on bonuses when it comes to paying taxes. The first obvious one is to get your income up. This can be done not just through a job promotion or extra freelance work, but by minimizing the taxes that may be deducted on that income from your employer.
Yeah, I claimed zero on my W-4 that I filed before 2020 when the W-4 form was updated, because I don't want to owe any taxes. But you're doing the opposite and increasing this number? What's your number at, Cap? And what are the consequences?
My number is 8 with my employer. However, the IRS has updated Form W-4 to make it more cumbersome. The new W-4 doesn't use the simpler numbering system or withholding allowances, and requires you to use more worksheets to calculate how much extra or less you want deducted from your paycheck. It's still possible, but requires more thought and documentation with the updated W-4. But the consequences of having less money deducted can be mitigated by breaking your tax payments into smaller ones that occur every 3 months. In other words, every quarter. Your employer already does this mandatory quarterly tax payment for you. They'll take all the money deducted from your paychecks and send that in so you don't have to worry about it. Because you claimed zero under the older W-4 and probably don't make 7 figures every year, then you'll likely overpay each period and get a refund by the following year.
Oh, I see. So by reducing the amount deducted, I'm keeping more of my money. But what about the consequences? Less money gets sent in based on what you've said. What does this mean for me?
Again, you simply have to break your tax payments into quarterly ones to make up for the payments your employer was making on your behalf. It's not too difficult to look at your prior year's W-2 and compare that with the tax table from the IRS to get an idea of how much you'll have to pay every quarter. Once you have an idea of how much you'll have to pay each quarter, get familiar with these payment sites that allow you to pay taxes using a credit card. Yes, you will have to pay fees because it costs money to pay with a credit card, and the IRS isn't going to eat that fee for you. As an example, pretend your taxes due for the first quarter of the year are $1,500. Check your pay stub for the amount your employer has already deducted so you know how much of that $1,500 has already been paid to figure out how much you owe. Here is where the bonuses start to kick in. In this example, you see that you still owe $1,000 in taxes for the quarter. That's $1,000 extra dollars that you control, at least for a few months. You could pay direct from your checking account, but there's no bonus awarded for that payment option. Instead, use a credit card and eat the small fee that tax payment sites will impose for doing so. Here's an offer for a card that is giving $200 for spending $1,000. Let's break this down. You're spending $1,000 on a card to receive $200 in statement credit, which is equivalent to cash since it helps offset the $1,000 tax liability. However, that $200 reward is reduced only by a small amount and stems from the payment site's processing fee. So the amount of money you get to keep from the card's bonus is still very high and worth the effort for some people. More on who these people are later. See Part 2 for more info. Additionally, the bonuses from credit cards are not considered taxable income. There was a story making the rounds in the credit blogs early this year where a U.S. court ruled they could be taxed, but that involved manufactured spending on a massive scale that allowed the defendant to live off of the rewards they received from credit cards. This activity is nowhere near that level and is not considered manufactured spending. However, an element of manufactured spending is possible through paying taxes this way because of the option to overpay your taxes. It's risky, but a savvy spender could use a card, preferably with a huge sign-up bonus and minimum spend requirement and lengthy 0% APR term to overpay their taxes. Then sit back and wait until the government gets around to issuing a refund. I wouldn't suggest this now due to the unknown length of time it would take for the U.S. Treasury to issue a refund. It used to take 2 to 4 weeks pre-pandemic, but takes much longer now. In fact, it took just over 2 months after I last did this in 2020. However, the opportunity is there if you can stomach the risk of holding out for months.
Yeah, that sounds risky. Let's talk about the checking and savings account bonuses.
The other upside to keeping more of your money by reducing the amount deducted from income is that you can earn more bonuses from checking and savings accounts. Pretend your direct deposit, which is your net income after taxes, is $450 per week and assumes that you're allowing the most amount of money to be deducted, so you get a tax refund every year. Here's a checking account bonus offer that requires $500 minimum direct deposits. By adjusting the amount deducted from your income, you could get your net income amount well over $500 and qualify for this bonus. Here is another bonus that requires a minimum of $2,000 in direct deposits each month. Again, the adjustment in allowable withholdings would ensure your direct deposits qualify for this bonus as well. Some banks have other conditions like maintaining a minimum balance to qualify. It's still possible making adjustments to your allowable withholdings to increase your net income would benefit in this scenario too. It's a bit more nuanced, but credit cards with lengthy 0% APR terms really help here. Simply front-load your tax burden onto the credit card, then make minimum payments over the promotional term to build your cash balances to meet the bank's requirement for their bonus. Depending on the credit limit allotted, this can cause your credit utilization to go up significantly and decrease your credit score. This can be avoided by using a business card like Chase's Ink Cash or Unlimited cards, or Amex's Business Blue Plus card. Because these are business cards, their balances won't reflect on your personal credit report. They have lengthy 0% APR terms and usually have nice sign-up bonuses, especially for Chase. Amex's card is a more targeted bonus and harder to come by. Again, it's all very nuanced, but scoring bonuses through checking and savings accounts is very possible. Keep in mind that any bonuses from checking and savings account signups are considered taxable income, and many banks will issue 1099s, which means you'll have to declare it as income.
Oh, I think I gets it now. By increasing my tax liability, I stand to increase my net income each period. I can use this extra income to satisfy bank requirements for checking and savings accounts to score some nice bonuses from simply making adjustments to my allowable withholdings. Because I'm increasing my tax liability, that means I have to make extra tax payments. By using credit cards to make these payments, I can score even more sign-up bonuses by making payments that I would have had to make anyways. The only difference is the onus of responsibility is on me instead of my employer to make these payments, and I can exercise the option to use credit cards and their lucrative sign-up bonuses to make some extra money for myself, often without increasing my tax liability, since credit card bonuses are not considered income. I'm starting to understand the nuances behind lengthy 0% APR terms and how they could be exploited in front-loading my taxes, especially if my tax liability was in the thousands and the card had an equally high minimum spending requirement. The overpayment option is risky, but I can see your point how I could overpay my taxes and file my taxes now, then wait so many weeks or months until the government gets around to issuing a refund for the overpaid amount. I wouldn't risk overpaying by a ridiculous amount, but if I had to pay $4,500 in taxes over the course of a year, I could see myself paying $5,000 in estimated taxes all in one shot to satisfy a card with a $5,000 minimum spend requirement like what's shown here. I'd score a nice bonus for myself, which isn't taxable. I'd have plenty of time to pay it off. I'd incur a small fee, but could theoretically satisfy the card's requirement to score the bonus in just one transaction. This is amazing since paying this way actually reduces my tax liability by hundreds, possibly over $1,000 if checking and savings account bonuses could be piggybacked throughout this same period. But can you explain more about who this is for? I mentioned having more financial accounts to manage would be a challenge. Will this pose an issue?
Have you paid your taxes with a credit card? Did you score a nice bonus for doing so? Let me know of your experience paying taxes in the comments. Hit it, Steve.